Hello, trading has closed on 22nd of November 2022. Let's do our disclaimer first. It's my trading plan for Wednesday, November 23rd. Please remember my calls can be wrong. Any trade you make should be at your own risk. Look for the pattern with the early high today, which we got, and tomorrow should have the early low. We thought yesterday's pattern had the potential to be quite negative, and I said the only thing that could kill the idea would be if we gapped up smartly and took out this high, and that's what happened. Here's what we said. We also got the commonest thing, a gap and a prompt move outside the day's range. The bulls did what they had to do. MEJT doesn't trust the rally. Says ultimately we're going to undercut this low, gives us a target of 39.6856, and usually more. There's no time limit, but usually you don't have to wait long. It also doesn't trust this late rally. Gives us a target of 39.8503. Most likely to print tomorrow unless we gap up smartly. Now, the days around Thanksgiving tend to be some of the most bullish days, consistently bullish days in the year. So for that reason and that reason only, I'm going to say these numbers might not print on schedule. But if I could just make a guess and not have rules, I wouldn't have to have rules. Unless we gap up, that's what the rules say. This late rally is something I don't really trust. It's not impulsive enough to be called a wall, but when you rally like this without pullbacks for an hour, hour and a half, and you leave unsatisfied targets behind you, it's not indicative of the way institutions trade. It tends to be a sign of the public going long and refusing to sell no matter what the price. It doesn't have to pull back. But if it does pull back, and particularly if we gap under this low, which the MEJT target makes plausible, would mean this whole thing was a false move. It would mean that the specialists were selling, and if it is the specialists selling and the public buying, the specialists tend to get their money back and very fast. So I'm not saying we're going to gap under this low, but if we do, the move should have legs, particularly so because this rally stopped right at strong resistance. These are the lines we've been showing for the past week or so. Here's support, and that held. Here's resistance. Right now we've rallied to, but not through resistance. So either you gap over resistance or the resistance wins. So either we gap over this line or any move over this line tomorrow shouldn't stick. We have numerous counts which haven't been invalidated yet by the rally, or also rallying into a declining 200-day moving average. It's very hard for SPX to make substantial gains past a declining 200-day moving average. Tends to be a rally killer, but that's still 60 points away. Doesn't mean you have to hit the line, but if you hit the line, I'd expect it to run into trouble. If we do continue going, our next target's around 4180. But let's look at this wave count some more. Have to be some way to count the waves in this structure. Well, this is a 5-minute chart, and I had this as 1 and 2, could just as easily be A and B. And if that's C, and it's 38.2%, A is right at 100%. So at least on the 5-minute chart, you have balance of the waves. Let's go to a higher time frame. Here's a 30-minute chart. Now I had this as A and this is B and that is C. But there's no reason that couldn't be A. There's no reason that couldn't be B. And if that's what it is, then C is right at 78.6%. So you've got the Fibonacci resistance right here. Let's go from the 30-minute chart to a daily chart. We have this as the commonest count, the simplest count, A, B, and a drop to C. Now what if that's A and that's B? In that case, C would be equal to A right at today's high. So we have numerous wave counts on numerous time frames with balance of the waves right at today's high. Now, just because the waves balance, it doesn't mean other wave counts won't work too. But it does mean there's strong resistance at today's high. It does mean if we're going to continue higher, we should gap up. And the real take-home point is, if we don't gap up, the rally won't stick. And if we gap down smartly instead under this low, I can explain a long way down because this is still a diamond and that's still a stilt. And even though the diamond on stilts doesn't have to go to completion, we start dropping like a stone, there's your target. Doesn't mean you will, but if you do, that's your target. Well, Wednesday's pattern has the early low. It could still gap up. Typically, it's a rally day with a final hour high. If it's weak instead, more weakness should follow in subsequent days. We have lower MEJT targets. Unless we gap up smartly, the rules call for lower prices, even if we don't close lower. The days around Thanksgiving tend to be bullish days, so for that reason alone, they may not print on schedule. Volatility index, the VIX, is under its lower Bollinger Band. The reverse through it, which hasn't happened yet, but if it happens tomorrow, it gives a sell signal. We've rallied to, but not through, strong resistance, and there are wave counts compatible with the rally ending right here. If the bulls are to continue the rally on the beta, we should gap up tomorrow. If we don't, I'd expect any gains to be retraced. If we do, higher price become targets, although the declining 200-day moving average should interrupt the advance, even if it's only temporarily. But if there's early weakness tomorrow, it's quite bearish. Despite the calendar's positive bent, a sharp drop right from the open, if it happens, should have good follow-through lasting more than just a day. So we've expended a lot of energy to get up to strong resistance. You either break through resistance or resistance wins. And it's the pattern with the early low. Doesn't mean you won't gap up. But it's the pattern with the early low. We have lower targets, and the bulls really have to perform tomorrow by gapping up if we're going to continue the rally. Because if it's a sharp move down, it's going to be quite a sharp move down. Pattern has the early low, and that's today's call.